We detected two unusual trades, one of which is worth $1.8 million on Western Digital stock, ticker symbol WDC. And what's also very unusual about these trades is that Western Digital reports earnings next week, January 23rd. And so in this video, we will analyze these unusual option activities to find out if these wealthy investors are bullish and buying Western Digital stock or bearish and selling Western Digital stock before earnings. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, the first trade over here, these 7,998 contracts for these 55 strike puts that expire February 21st were being traded in the last hour of the market at 3:17 p.m. But notice that there are two other trades happening at the same time. And so this is actually the same trade. You can see this was done as a spread here. And so we have to analyze these three options to find out exactly what this wealthy investor was doing in the last hour. And so let's take a deeper look at the option chain to find out more about these February 21st options. As we can see here, at the 50 strike puts, the 4,000 contracts being traded at the volume, 55 strike puts, 8,000 contracts, and at the 60 strike puts, 4,000 contracts. All three of these options are new opening trades because you can see that the open interest is much less. So it would not be possible to close out of these options. And so based on our analysis, this investor was selling the 55 strike puts, two of them for every 50 strike put that they bought, and also the 60 strike puts. Because notice the ratio here of a 1 to 2 to 1 here, just like what they did, but they had 4,000 contracts being traded. And so when we analyze this trade, we can see here on the risk profile profit loss graph, where the x-axis represents the share price of Western Digital stock, where it is currently trading right over here at $62. And the y-axis is the profit loss, note the zero break-even point. And so when the lines are below it, it is a negative loss. And so as you can see here, this trade is a butterfly spread using put options, which means as the share price goes down, it actually becomes more positive gains. But if it goes up, it becomes more negative loss, because this is a short bearish trade, specifically targeting the $55 share price here. And that is why the blue line here is the max profit per trade. And we can confirm that this is a short bearish trade because we can see here from the Greeks that this is a negative delta trade. If it was a bullish trade, it would be a positive delta. And we can estimate the total trade cost because they spent about $89 of debit per trade. And we know there was 4,000 contracts, so we multiply that out, and we get about $356,000. So not as much as the second unusual trade that we will analyze next. But keep in mind, because these are earnings trades, it is a higher risk trade in comparison to the trades that we share on our website. And so if you want access to lower risk, higher chance of profit trades, make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas that the wealthy investors or insiders are trading, because not all of these trades will be profitable. Some of these unusual trades will be a loss, but as long as we diversify our portfolio with trades based on stronger data that we share on our website, then we can become long-term profitable. Now for the second trade, we can see here on the options time and sales tape was over here, 7,165 contracts for the April 17 options at the 70 strike call and the 80 strike call. And we can calculate the trade costs for each of these contracts because we can see the price they traded it for. And so if we take $297 subtracted by $112, since we have to multiply by 100 since each option represents 100 shares of stock, we get $185 per trade or contract. Now, how many contracts were there? Well, if you take a look here, there's actually more trades happening all at about that same time of 11 o'clock in the morning for the same 80 strike calls and 70 strike calls. And so when we take a deeper look at the option chain to find out how many contracts were being traded for the April 17 options, we can see here that at the 70 strike calls, we had 10,000 contracts being traded at the volume today. And at the 80 strike calls, we also had 10,000 contracts. Both options are clearly opening trades since the open interest is much less at 2,000 contracts. And so we can estimate the total trade cost because we know they spend about $185 per contract. And since we now know there's 10,000 contracts, we multiply that out and we get a total trade that costs $1.8 million. Now, even though this is $1 million trade, as we mentioned earlier, this is still higher risk because of earnings. And that is why we use position sizing to trade this. As we mentioned earlier, this is still a higher risk trade in comparison to the trades that we share on our website, which is lower risk. And so you can see that we also traded this in the same position over here, but we use position sizing. POS stands for position, green means buy, red means sell, where we also bought the 70 strike calls and we sold the 80 strike calls for $185 as we had just calculated. And so when we analyze this trade, we can see here that as the share price goes up, it becomes more positive profitable. If it goes down, it becomes more negative loss. Because this is a long bullish trade, and we can confirm it here on the Greeks, we have a positive delta trade. And so we have two unusual trades going the opposite direction. One that is bullish and the other is bearish. And so that is another reason why this earnings trade is a lot higher risk and why we are using position sizing to manage our risk, not putting as much capital in these earnings trades because we put most of our capital in the trades that have a higher chance of profit. If you are interested in gaining access to those trades based on stronger data analysis of what the wealthy investors are trading that have lower risk and a higher chance of profit, then make sure to go to our website. We'll put a link over here. Let us know in the comments below. Do you think Western Digital stock will go up after earnings or will it crash down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.